Good morning and welcome. Thank you all for joining us for the Investing in Critical Minerals and the Future of the U.S. Supply Chain. We appreciate you taking the time to be a part of today's discussion. This is a 1 hour educational webinar designed to provide context around critical minerals, the markets, and capital behind them, and what it takes to build domestic supply chain capacity in the United States. A few quick notes before we begin. All participant audio and video are muted. There will be no live audience participation during speaker segments. Questions may be submitted at any time through the Zoom Q&A function or by emailing pr@westwindelements.com. If we have time for questions at the end, our team will review and select questions to keep the discussion focused and on time. If for any reason we do run out of time today, any questions that are submitted will be reviewed, answered in text format, and then followed up via email. Okay, so to ground today's discussion, I am pleased to introduce Alex Worthen. Alex is a retired U.S. Marine Corps infantry officer and national security advisor with nearly 3 decades of experience across defense, global operations, and the private sector. He has led organizations ranging from small teams in austere environments to complex enterprises of more than 3,500 personnel. Alex brings a national security and operational lens to critical minerals, connecting supply chain resilience directly to defense readiness and U.S. industrial capacity. Alex, thank you so much for joining us today.
Well, thank you, and I hope everyone can hear me. Belated Happy New Year to everyone on the call. Special thank you to the Westwind Elements team, a group of folks who are near and dear to my heart and are doing great things for the nation. So, as stated, my background is primarily more on the defense and government side, and that's still as I come to you this morning from just outside of Washington, D.C. And I'm still very much involved in this issue and the advancement of this issue for our nation, for private industry, and for the defense sector, and where I sit, where all those things overlap. My introduction to the critical minerals and rare earth space goes all the way back to 2012, just a few years before I met the CEO of Westwind Elements. We go way back, and so I've been in one way, shape, or form involved with this problem at the strategic to tactical level for quite some time. That being said, what are critical minerals and why do they matter? You're going to have the individuals as part of this presentation today go into much greater detail in terms of the nuts and bolts of the different types of critical minerals and rare earth elements that exist across the periodic table. In a nutshell, from where I stand, here's what we need to know. The basic foundation of our quality of life in the information age is the foundation for that is these critical minerals and rare earth elements. The nickel, copper, dysprosium, all the different metals that we pull out of the ground that form the foundation for our industrial base. The challenge for the United States now is that a fair amount of that industrial base and that industrial capability, we've outsourced it. There are multiple reasons why we did that. Mainly tied to cost, to be blunt. But we did not anticipate 30 or 40 years ago when we were making those strategic shifts in terms of our manufacturing. We weren't looking ahead at the strategic vulnerabilities that would potentially open up for us in the future. Well, the future is now, and here we are. And as a nation, we've come to the very stark realization that offshoring all of that capability has put us at risk. So what you have now across the ecosystem are a bunch of courageous, mainly startup companies that are trying very rapidly to close that gap and to bring that capability back to the United States in order for us to secure and achieve strategic supply chain security and resilience. All right. When we talk about the ecosystem across the board, and again, the folks here are going to go into greater detail than I can or that I will in terms of understanding what it means. But everything from the extraction piece, pulling things out of the ground or recycling things to get that raw material, processing that raw material into oxide form, and then going from oxide to metal. That entire process from start to finish is extremely difficult because we have to invent all of the novel chemistries and engineering required to do it in a way that's acceptable in the Western world. The way the Chinese go through that entire process, and primarily that's where the industry is now in China, is completely unacceptable from both a humanitarian and environmental standpoint. So that presents some challenges. You know, we could certainly do it the way that the Chinese do it, and simply take those brute force processes and bring them back. But almost no one would want it in their backyard. Trust me on that. Some of the conditions in terms of what we've seen, in terms of the way the Chinese and some of our other foreign competitors go through that process is barbaric, to say the least. So I say all that to say that the overall importance here in terms of criticality is not just access to the minerals, our ability to extract, process, and metallize the minerals, but it's having that secure source of feedstock to metal that none of our foreign competitors and potentially foreign adversaries would ever have the ability to cut off. And we talk about supply chain resilience and supply chain security at the strategic level. That's really what we're talking about. And I can tell you that that's mainly the focus of effort here in Washington, D.C., in terms of people understanding the importance of how we are going to onshore this capability and why. And make no mistake about it, you know, any sort of domestic supply and industrial base, as we're looking to bring those capabilities back to the United States, back to the American worker, and back within American shores, it's not going to go anywhere if we don't have the critical mineral and rare earth um, equation solved. Certainly not going to be easy, but again, thankfully, to the efforts of many of the people who you're going to meet on the call today, we are on track as a nation holistically with solving the issue. We've got a lot of catching up to do, but I can tell you from my perch, I am completely confident in our nation's ability to solve and tackle this issue. And I'll simply leave you with this as I close out here this morning. I am very bullish on America's ability to tackle this issue. You know, one of the beautiful things from my position here in Washington, D.C., is I not only get to work with the West Winds of the world, but a multitude of other organizations, both government and private, who get up every day focused on tackling this issue and on solving this problem. And some of the innovations that are all, you know, completely, homogeneous and American in their approach are eye-watering. And so it's humbling for me to have the opportunity this morning to speak to you and to introduce, you know, this great group of Americans who are helping solve this overall strategic issue for the United States. And again, I am fully confident in this company and fully confident in our nation's ability to solve this issue because we don't have a choice. In order for us to bring back our industrial base and to have the industrial base security that the nation needs and deserves, it's got to start with the critical minerals. It's got to start with that basic raw material that we need to construct anything else. So with that said, again, you know, my name is Alex Worthen. I'm proud to be here, proud to be a part of this team, and humbled to have had the opportunity to open this up and to meet and speak with everyone this morning. All right, so God bless. Have a great year, and I hope look forward to furthering the discussion in the future.
Thank you so much, Alex. We appreciate your time this morning. And that leads us to our next segment. And next, we will turn to the market itself with Robert Morris. Robert Morris has more than 15 years' experience as a senior executive in the mining and metal space, most recently with TechMet, a marketing and trading company specializing in energy metals, where he is co-managing director. Previously, Robert was with Vale, where he served as Executive Vice President, Sales and Marketing Base Metals. Robert was instrumental in developing Vale's strategic direction relating to the company's electric vehicle strategy, specifically how to position Vale's vast nickel, cobalt, and copper assets to maximize value in the era of electrification. While based in Tokyo, he was president of Vale's Japanese subsidiary, Vale Japan, managing the company's nickel production assets and leading the sales and business development activities covering nickel and cobalt specialty products. Prior to Vale, Robert was managing director at Umicore, Greater China, responsible for marketing Umicore's line of cathode battery materials to the China market. Robert also served as the chairman of the Nickel Institute, the voice of the nickel industry, and a board commissioner at PT Vale, one of the largest publicly traded nickel producers based in Indonesia. A graduate of the University of Calgary, Robert holds an undergraduate degree in economics and has completed executive management certifications from IMDb Business School and MIT Sloan School of Management. Robert, welcome to the discussion and thank you for joining us today.
Thank you very much, Audie. I can't get my video up here. Okay, there we go. Um, no, it doesn't. My video. It says it's being disabled by the host. Is that correct?
There you are.
There I am. Thank you very much. Thanks for the introduction. That was obviously the very long form of my bio, so apologize for that. I probably could have given a much shorter one, but it demonstrates the number of years that I've been in the industry, which is now over 30 years in the critical minerals segment, particularly as it pertains to things like nickel and cobalt. So I thought I would start this segment just by getting everybody on the same page as to, when people use the phrase critical minerals, it's easy to picture one big market moving up and down in tandem, but that's not really how the space works. Critical minerals is a label that sits on top of many different commodities, each with its own supply chain, its own end markets, and its own pricing dynamics. Some are connected, but many are not. In practice, as a group, it's closer to saying technology or healthcare than it is to say oil or gold. One quick example of this, if you strip down an electric vehicle to its key components and look for critical minerals, you're going to find things like lithium, graphite, nickel, copper, and rare earth magnets. If you strip a jet engine, defense platform down, you're talking about tungsten, nickel, titanium, and specialized materials. All of these materials have unique supply and demand profiles, and ultimately, and most importantly, they have different supply chains. So the common denominator is not the end use case in itself. It's the definition of critical. In that the materials that matter for the economy and strategic industries, and this is quite important, that there's meaningful vulnerability in the supply chain, such as concentration risk, processing bottlenecks, geopolitical exposure, and all of the above. So the goal today is really to get a clean mental model. What drives demand? Where supply risks really sit, and why critical does not always mean scarcity. So at a high level, demand for critical minerals comes from four really distinct pillars. Each pillar pulls on a different set of commodities. The first one, and I think probably most of us are familiar with, is the energy transition. EVs, batteries, grids, renewables, and storage. In batteries, the headline materials are typically lithium and graphite, with nickel and cobalt and manganese often used in the cathode materials, depending on the chemistry used. Overall, in the broader part of electrification, copper is the workhorse. Transmission, transformers, wiring, and in motors and in some wind applications, rare earth magnets, materials like niobium, for example, can be essential, which are essential. The second is the traditional manufacturing and industrial activity. So that is where the volumes of these critical minerals often live. And it's easy to miss because it's not always branded as energy transition, for example. Think about things like stainless and specialty steels, industrial alloys, and chemical processing. Nickel is a good example, but so are manganese and vanadium in steel and alloying, titanium in high strength applications, and platinum group metals in industrial catalysts. The third pillar is defense and national security. These materials can be critical not because they're consumed in huge tonnage, but because the consequences of disruption are outsized. Examples include tungsten in hard metals, titanium in aerospace alloys, beryllium in specialized defense components, and rare earth magnets in precision systems. The fourth pillar is technology. And we're not just talking about commercial electronics, but the infrastructure behind the digital economy. Data centers, telecom, advanced manufacturing, and industrial automation. Here, gallium and germanium show up in high-performance electronics, indium in coatings and displays, and rare earths, again, in robotics and precision motors. Now, on the supply side, criticality usually shows up in the middle of the value chain. Mining, for example, is only the first gate. For many of these materials, the choke points are in processing, refining, chemical conversion, and then component manufacturing. And this is where the concentration risk becomes concrete. Upstream production may be spread across multiple countries, but midstream processing is often far more concentrated. China is the central example across a large number of critical minerals. Scale, integration, and early investment have created durable cost and capability advantage outside the US. The US and its allies economies tend to have strong downstream demand and technology ecosystems, but less installed capacity in those midstream steps. That what we call middle gap is why you hear so much focus on refining and conversion, not just on what is in the ground. This is often referred to as the midstream processing gap. So if you're used to more liquid commodity markets, critical minerals can be surprising because the friction is not just geology. It's time, capital, and social license. First thing is that in this space, timelines are typically very long. And this is a bit of the conundrum because time is one thing that we don't have to our advantage right now. A mine or refinery is typically multi-year sequencing, permitting, engineering, financing, construction, commissioning, and then qualifications with your end customer. Second is that these projects are capital intensive and execution sensitive. Refineries and chemical plants are big check assets. You only discover design problems typically after you've already built them, and small changes can ripple through the entire system. That's why cost inflation and change orders matter so much in this sector. In the West, we have seen multiple projects where budgets and schedules move dramatically as construction met tight labor markets, equipment, lead times, and evolving designs. One widely discussed example you may have heard of is Li-Cycle, battery recycling company's Rochester hub in New York, where reported cost increases contributed to a pause and restructuring. I mentioned that simply just to underline the point that execution risk can overwhelm a model. Third, permitting. It's not just paperwork, it's a multi-stakeholder process. Even strong projects can be delayed by environmental review, litigation risk, water and power access, local zoning, indigenous and community consultation. And then this is where a lot of people overlook the complexity here, and that's with the social license layer. A refinery can be viewed as a bad word if it's in your community. Communities here processing and picture smokestacks when in reality, modern facilities can be extremely clean, have closed loop water systems, strict emission controls, and processes that look more like advanced manufacturing than old style heavy industry. But the perception matters. Trust has to be earned through transparent design, monitoring, and community engagement. And finally, there is the not a level playing field reality. In many critical minerals, the incumbent supply chain has structural cost advantages, scale, integrated infrastructure, and in some cases, direct or indirect state support. When the dominant supplier can keep capacity running through low price cycles, it can suppress price and make it hard for higher cost jurisdictions to finance new projects. This is why China plays such a central factor in so many of these discussions on critical minerals. The backdrop for the role of the government, this point is not to replace markets. The point is to make strategically important capacity financeable when resilience has a public value and when the spot market does not actually want to pay for redundancy. The toolkit is broader than most people think. Grants for early engineering and demonstration, low interest rates, low interest loans or loan guarantees to lower the cost of capital, tax credits tied to domestic production, strategic offtake commitments, and mechanisms that reduce price risk, such as price floors or contracts for difference that backdrop revenue throughout the cycle. If done well, these tools crowd private capital in, they do not crowd it out. A helpful comparison is that critical minerals are commodities, but they behave like supply chains. Oil is a relatively standardized commodity. Many critical minerals products are not. And in oil, the bottleneck is often the resource itself or the transport. In critical minerals, the bottleneck is frequently processing, chemical conversion, and customer qualification. So to have the right mental model is that it's not about more mines. It's about building the middle of the value chain and doing it credibly, cleanly, and at scale. I think nickel is a useful case study here because it shows why critical does not automatically mean shortage of supply and why one mineral can sit in multiple economic stories at once. On the demand side, nickel is first and foremost an industrial metal. Stainless steel, special alloys remain the anchor. Batteries are important growth segment, but battery share depends on chemistry choices and the change in battery dynamics. These things that are also used in things like for jet propulsion, heat and corrosion resistant alloys for armor, missiles, naval systems, and even rockets and hypersonic vehicles, many of which have no substitution. And I think the point being here is that nickel is not one product. Nickel units can flow into stainless production in one form and batteries in another. For batteries, manufacturers typically need nickel in a chemical form, often nickel sulfate, for example, at high purity and consistent quality. Converting mined material into products requires additional processing steps and a qualified, thorough supply chain that has many, many links. And to just finish off here, this is where the US has a gap, and I think most of us recognize this. The US can have a demand for batteries and high performance alloys, but it has limited domestic capacity to take nickel feedstock and convert it into battery ready chemicals at scale. In many cases, intermediates, which is the feedstock, are processed abroad before re-entering downstream manufacturing. That creates the key exposure, not only to price, but to logistics, trade friction, and single point failures. So in closing, just stepping back, the main takeaway here is pretty simple. There's no single critical minerals market. There is a set of materials that matter, each with its own demand engine and its own supply chain vulnerability. So that concludes my talk. Hopefully, it wasn't overly basic, but I think that um, in order for most people to see the word critical minerals, which is popping up more and more, especially as a Google reference, um, that it is much more than just a set of a few minerals in their basic form. It's the supply chain and the midstream processing that makes or breaks the term security of supply. So thank you very much.
Thank you so much, Robert. And again, we appreciate your time this morning. So next, we're going to be talking a little bit about how capital plays a defining role in which these critical mineral projects ultimately move forward. And this will be with James Webb. James Webb is a managing director at Rothschild & Co. in the Global Metals and Mining Group. Based in London, James has more than 17 years of experience advising companies and investors on capital strategy, financing, and multi-billion-dollar M&A transactions across the mining and metal sector. James will share how institutional and strategic capital evaluates critical minerals projects, including how risk, timelines, and credibility are assessed. Now, as a disclaimer, James did have a last-minute traveling conflict. However, he was kind enough to pre-record his segment for us. So, excuse me, I'll be sharing my screen and we will be viewing his video that way. So one moment, please.
Well, thank you very much, Andy, for that very nice introduction. So this session is entitled Capital Development in Critical Minerals, which gives me a lot to cover in 8 minutes. I'm going to boil this down to three main bite-sized topics. Firstly, I'll talk about the evolution of the financing market for metals and mining projects over the last 20 years, which should set the scene for understanding the current trends and challenges facing the industry. Secondly, I'll then broadly identify the various sources of capital and how they come together to finance new projects. Third and lastly, I'll round out with an overview of how capital providers typically assess financing opportunities in the sector and how capital availability and cost evolves over the course of project development. So to start with, I thought I'd give you a very short history of the metals and mining industry, particularly from a financing perspective, over the last 20 years. So going back to the mid-noughties, there was lots of capital available. China was growing ravenously, big focus on growth. Mining companies in particular were measured by the size and depth of their project pipeline. Things were going really well. Commodity prices were flying. We then hit the global financial crisis. Prices collapsed, but actually bounced back pretty quickly in 2010, 2011. Capital continued to flow into the sector, arguably, with hindsight, probably too much capital, too much good money getting thrown at bad projects. And at the time, the real commodities of focus were things like coal and iron ore, which obviously today nowadays we look at as old world commodities, but at the time were sort of really at the forefront of investors' minds. That continued for a few years, but then by the time of 2013-14 in particular, prices completely collapsed, and the sector was on its knees, frankly. And the focus was all on repairing balance sheets and not investing in new projects through 2014, 2015. We then went into 2016 and things started to improve, and that was the sort of 2016, 17 up until 2020. There were improvements, but what happened in the market was a lot of the institutional capital demanded returns over investment. And so there were very few new projects being financed, arguably sowing the seeds of some of the challenges we face today in terms of lack of supply diversity. COVID hit, obviously, 2020, terrible year pretty much for everyone. But 21, 22 were bumpy years on the back of the COVID bounce. But this is when I think the industry really started, or at least the Western industry really started scrutinizing supply chain resilience, and it's when policymakers began this real focus on diversification of supply, that there was a realization that China dominates the processing and therefore the supply of many critical minerals, which was, critical minerals were becoming new words in sort of many people's lexicon around that time, 21, 22. And I think, when looking back, on those years, for me, that's really when, sort of it was the dawn of the age of critical minerals. That leads us to where we are today, early 2026. But there is a general acceptance that supply chain diversification is critical for resilience to external shocks, as we saw through COVID. I think there's also an acceptance that onshoring, or at least friendshoring, is an important sort of weapon in our armory, particularly in the West, where we've relied so much on single sources of supply for so long. And that's also now why we are seeing projects that historically were never considered are now being prioritized for investment for development. All that said, we are seeing that capital remains very scarce, especially from private sources of capital. I mean, unless you're developing a gold or a copper project, it remains very tough to raise the finance. And that's because the sector has been unloved for many years. The risk is typically higher in metals and mining than capital projects in other sectors. Take infrastructure, for instance, where building a toll road or a bridge is something which most investors can visualize, whereas building a mine is really very hard to visualize, and actually you don't know what that mine is going to look like once it's built. There's a limited expertise in assessing these opportunities in developing projects. There's long lead times in project delivery. Projects can take 5 to 10 years to come on stream. The size of the capital requirements are often extremely large, and frankly, particularly in the West, we have a really poor track record of delivering large-scale projects on time and on budget. And this is where a really good example that I often refer to is a project called Ambatavi in Madagascar, which is a nickel mine and processing facility, which was meant to cost $3 billion to build and ended up costing over $8 billion. So what we're seeing now is because of this sort of tepidness from the private markets, governments are now much more actively stepping in to support these projects, get them off the ground. Initially, governments were reluctant in this approach because they didn't want to crowd out private capital. What we're seeing now is that they're much more proactive, and there are a number of instances growing by the day where there is government-led funding to meet sort of specific policy goals. And a couple of examples that come to mind are where the US DFCs invested in the equity of TechMet, or where the DOW invested in MP Materials. You're seeing more and more of these as the days and weeks go by. And I think while I don't have a crystal ball, I think a reasonable question is, well, what do you think the future holds, James? Look, I think that more and more of these kinds of projects will get financed. I think we're going into a real bull market for the metals mining industry. I think that more projects will get financed across a wider spectrum of commodities, and you'll see more government intervention, as you're seeing, for instance, in the nickel industry in Indonesia at the moment. And that will lead to higher prices, and higher prices incentivizes new production, which is great. And also you'll continue to see bifurcation in the financing markets, so bifurcation between China and the West. So I think that you'll just see more and more of this, I think, over the upcoming years. So that's the kind of the sort of the lay of the land as we are today, and the history that's brought us to where we are. I now want to just talk briefly about what are the sources of capital for the metals and mining industry, and how they come together. And I'm just going to share a slide with you to summarize the various sources are across the industry. And most of these are quite customary. You have equity finance. We see a number of projects being financed with joint ventures or minority partners coming in. You obviously also have off-take link financing, so where the project company is producing a specific commodity that an off-taker or a trading house wants, that they can then finance the project on the back of that off-take. You have typical corporate bond, corporate debt facilities, convertible bonds. And then you also have project financing quite regularly in the metals mining space because of the nature of the kind of projects that are being built. And you also have a number of royalty and streaming companies who are willing to deploy capital, typically at a lower cost, sort of with a claim on the future cash flows of the project. So these are typically the kind of sources that we would at Rothschild and Co. we would look to talk to when advising our clients on the financing of their projects. And right at the centre there, of course, is the one I've already touched on, which is the sort of the government funding initiatives. To round out, I said I would talk a bit about sort of how capital providers typically focus, or what they typically focus on when assessing financing opportunities in the sector. And I think most important of all, top of everyone's list is always viable project economics. You've got to have a project that makes sense economically, and because metals mining companies are price takers, those economics need to make sense in low price environments so that you're not going to be crushed by your creditors, but also with lots of upside for the equity when the prices fly up. So look at the gold sector at the moment. What you're seeing is that the equity holders of those gold companies are making out incredibly well, and that's the benefit they had from the financing of those projects in the last 5 or so years. So after viable project economics, you also need a really high quality feasibility study, which has been pulled together by someone reputable, where there's no gaps, and is recent as well. Sort of old studies, the world moves on. So a recent feasibility study backed by viable project economics, with a management team that knows what they're doing, have done it before, a sponsor group which are creditworthy and are going to stand behind the project. If it hits problems, if it hits funding challenges, but there are people there that are willing to back it. The contractual framework is solid. So offtake, procurement, contracts in place, permitting's in place, or there's a line of sight to getting the permits in place. And increasingly important over the last 10 or so years has been a focus on environmental and social approach, and what the impact is of the environmental and social policies of the company. Now, finally, I'm just going to touch on very briefly another slide that I've added to the presentation here, which is just valuation, because of course you can't talk about how capital or how investors assess projects and companies in the sector without talking about valuation. And this slide here, there's a lot of colours, but let me just try and boil it down to the key message. So what you see on the slide is, as from left to right, that's as the project goes through its development stages, from initial exploration and discovery and scoping studies, through feasibility and financing, construction, and then finally production. And what you'll see is that in those early phases, there's little value creation, frankly, as the asset gets assessed and bankability is sought. Where you get the biggest value unlock is at financing, once you hit final investment decision, which is bullet number 4 here on the slide, which is when financing secured, and you can see that massive value uplift through construction into first production. And that is where Westwin is right at this time, is looking to secure finance for its final investment decision in the course of this year. And we would expect, I would expect, a big value unlock event to occur once financing is in place, construction's underway, and there's line of sight to production. But let me stop there. I covered an awful lot of material today. Thank you very much for your time.
Okay, and that wraps up James's portion of the presentation. Okay, and next we have Dennis Muhlenberg, who brings an investor lens informed by decades of leadership at the highest levels of industry. Dennis spent more than 35 years at Boeing, ultimately serving as CEO and chairman, including leading Boeing's defense, space, and security division. Since retiring, Dennis has focused on investing in and advising transformative opportunities across aerospace, defense, and critical materials. Dennis will walk through how he evaluates critical mineral investment opportunities, including his personal due diligence framework, and how he assesses risk and long-term value. Dennis, welcome.
Andy, thank you for that kind introduction. And good morning, everyone. It's good to be with you. And thanks for the opportunity to talk about this important topic. By now, you've heard from Alex talking about the importance of this work in critical minerals from a national security standpoint. I think Robert gave us a great overview of the market and the four pillars that he described. And you just heard from James on some of the critical investment aspects and capital deployment aspects. And I'd like to build on those three and talk in particular about the opportunity here with Westwind Elements. As Andy mentioned, I had the privilege of working at the Boeing Company for about 35 years, where I started as a summer intern and finished my last 5 years as the CEO of the company. And during that time, I certainly had an opportunity to see the importance of critical minerals in the aerospace and defense supply chain, one of those four pillars that Robert mentioned. So I understand the importance of this marketplace and bringing critical minerals and supply chain resiliency to the table. During that time period, I also had the opportunity to really focus on transformative opportunities. Under my CEO tenure, launched what we called Boeing Horizon X, which was our corporate venture capital arm, investing in transformative opportunities that would create long-term value. So this is an area of high interest to me for a long time. Since retiring from Boeing about 5 years ago, I started a company called New Vista Capital. We invest exclusively in the aerospace and defense world, including a focus in critical mineral technology. And during that time period, I've had the chance to look at literally hundreds of companies in this space. And I've selected a very small number of those, less than a handful, for my personal investment and involvement. And I'm honored to say that Westwind Elements is on that very short list. And I'm honored to serve on the board of the company as well as an investor. Now, let me give you a few more perspectives on what's behind that investment. First of all, why invest in critical minerals? I think, as you've already heard from the three previous speakers, this is an incredibly important market, one that is growing rapidly, one that has applicability across multiple sectors, ranging from power to energy to aerospace and defense. So it's a very important marketplace, both from a national security standpoint and an economic security standpoint. And I love to find investment opportunities that ride some of those strong macros and things that create both economic and national security benefits. So I believe critical minerals is an excellent investment category broadly. Now, if you look specifically at Westwind Elements and kind of how do I go through that thinking process of investing in a particular company, I like to look for a company, first of all, that is operating in a big, growing market. And as I just described, certainly we have that in this critical minerals area. And in particular, if you think about what Bob described in terms of investing in the middle of the supply chain and important refining capabilities in particular, I'm very attracted to that segment. And Westwind Elements is set about to build our nation's first nickel refinery. So addressing a critical point in the supply chain in the middle of a very large growing market, very important to me. Secondly, finding a company that has differentiated technology, and the refining processes that Westwind has developed and demonstrated are exactly that. The carbonyl process is very unique and tailored, and it's an environmentally friendly process, which is critical to implementation here in the U.S. It's a process that's both safe and environmentally friendly, and those are critical parameters from an investment standpoint. I also look for intellectual property protection and the ability to create a competitive advantage for the long run. And as a first mover in this space, Westwind Elements certainly brings that to the table. And then perhaps most importantly, I look for a strong team. I look for an experienced team, a team with great leadership, a team that's committed for the long run, and a team that brings the right character and values foundation to the table. And I'm pleased to say I've found all of those elements in the Westwind Elements team. This is a great team of extraordinary worldwide experts that have been assembled, a team that's absolutely committed to the mission and a team that stands on strong values and character and brings integrity to the business process. So those are all great ingredients for an investment, and I see all of those in Westwin Elements. Now, when I think about the due diligence process surrounding that, I'll go back to some of the comments that James described, the importance of thinking through capital deployment. I like that last chart that James showed that shows where the value creation really happens. And we are now at that stage with Westwin Elements. When I think about good capital deployment that's allowed us to reduce risk, capital deployments have already been made to build a demonstration plant. That demonstration plant is operating. It's proved out the technical processes. It's proved out the nickel refining capability. And now it's all about commercial scaling. So we're into that high growth phase of the value generation graph that James showed you, which is why I think now is a great time to get in from an investment standpoint. And we're now about taking a proven technology, a proven team, and commercially building it out, scaling that capacity, and meeting a need that is growing by leaps and bounds. So now is the right time to invest. And I'll close on that final point. When I take a look at this Westwin Elements from an investment standpoint and a due diligence standpoint, I've looked at this from every potential angle, and I have great confidence in the team. I'm very bullish about this company. I'm bullish about what it's doing, and I especially like the fact that we're working on something that's very important for the country, something that's going to create extraordinary economic value, something that's going to create national security value. We're on an important mission here, one that is purpose-built. We're making wise use of capital and deployment of that capital, and we're at the right phase, which will generate maximum returns on those investments. So now is the time to invest at Westwin, and I wanted to let you know that I'm all in and looking forward to the next steps. With that, I'll close out, and Andi, I'll hand it back to you.
Thank you, Dennis, and we appreciate that expert insight. It is invaluable. So, with that said, to close out the speaker portion, we are going to hear from the front lines of execution. Micah Sarton is Chief Development Officer at Westwin Elements, and he has built and scaled businesses across multiple industries and has raised nearly $80 million while leading development, execution, and capital formation efforts. Micah will speak to what it actually takes to build America's only major nickel refinery, including the operational, regulatory, and capital realities of executing a domestic critical minerals project. Micah?
Hey, Andi, I think you'll need to allow me to share start video. Looks like.
Okay, I got that going for you.
All right. Well, good morning. Thank you, everyone, for joining, and it's great to hear from leaders in the industry. And so, thank you to all my fellow panelists for the insight. As has been made abundantly clear this morning, this market is ready for investment. It's prime for investment. Obviously, the urgent national security implications of reliance on these supply chains, as well as just the strong market demand, have primed the critical mineral space for good dollars. And so, in my role at Westwin as Chief Development Officer, that is my day-to-day. I'm speaking with investors on a daily basis. As Andy's mentioned, we've raised nearly $80 million in funding in the critical mineral space. And so spoken with thousands of accredited investors and I would say more than 100 institutional investors. And it's with that feedback and those conversations that we've constructed a business case at Westwin that is primed for investment, both institutionally and here this last remaining gap for the accredited investors. So let me just briefly, I want to provide a brief project description for Westwin, and then I'll jump into some of those things that we have done, some of the things that we've spent money on to bring this project to a truly investable stage. Very high level, Westwin is building America's only major nickel refinery. We're doing this to solve a crisis in the United States, which summarized, if we look at U.S. nickel consumption, Today, we consume about 250,000 tons of nickel per year. We produce zero. And so this is an urgent matter and a big problem that needs fixed. I think we're the most likely to fix it. Project summary. We are, as Dennis mentioned, we are a first mover on bringing a solution to the United States. Our solution includes a retrofit of an existing facility to bring about 18,000 tons of Class 1 nickel production here in the United States in 2027. We've selected a midstream business case to produce some reduced commodity pricing exposure. As per Robert's point, this allows us a buffer from those commodity pricing exposures, which is really attractive from the institutional investor perspective. Additionally, we have selected a technology that is proven. We are not a research and development company. We are bringing about proven technology here to the United States. We've selected a technology that's over 100 years old, one that allows us some feedstock variability, some flexibility on our supply chain. This technology also yields very little, actually zero solid or liquid waste streams, providing a reduced permitting risk and timeline. And finally, the business case that we built, at the end of the day, it has to yield a strong financial return, and we've seen that, and we've been able to build that. So, with that, I want to jump into some of the feedback that I received from institutional investors and sort of how we've used that feedback to guide our deployment of capital and the project development. So we've been working with institutional investors, for almost since the beginning here, long before we were ready for their investment. But they've been guiding us on some of the key check boxes that need to be checked in order to get institutional investment. And so first and foremost, what we've seen, they're looking for a de-risked business case that can deliver expedited supply to the United States. Mining projects are not an expedited or de-risked path to solving the supply chain. Although we will need those projects to come online to bolster our resilience, we feel it essential to start with this midstream refining case. And they also wanted to see proven technology in that, right? So there is not a lot of investor appetite for brand new emerging technologies. They want to see the United States be brilliant in the basics before spending research and development dollars. The other thing right off the top was they wanted to see that Westwind could actually pull this off. Yes, this is a proven technology. It's been around for over 100 years, but it was important for the capital markets to see that Westwind can demonstrate on this. So with that feedback, we went and raised our Series A, and we constructed a demonstration plant. That demonstration plant successfully produced America's first nickel carbonyl powder on U.S. soil. We built that plant in just about 9 months, and it still operates and produces nickel today. The other thing that they're requiring is security on our supply chain. They want to know that we have reliable and consistent feedstock supply. Today, we check that box. We've partnered with a group called Traxys, who has agreed to supply all of our feedstock requirements for the first 7 years of production, satisfying that requirement. Additionally, they're looking for pre-sales on our output. Before financing, before moving to FID, they want to see 70% of our initial commercial output pre-sold. We're proud to say that has also been done today. Westwind currently holds about approximately $1.7 billion in product sales. And again, these are not term sheets or MOUs. This is binding take-or-pay investable offtake. And again, we have that today, $1.7 billion, satisfying that requirement. Additionally, as James mentioned, there's a requirement for a bankable feasibility study. That bankable feasibility study has been completed for Westwind. We partnered with Worley, and then had Hatch produce an independent peer review on that, and successfully delivered a positive and investable independent peer review. The other thing that we're seeing is a heavy focus on the general contractor or the EPC. In our case, that box has been checked. We have officially contracted with SUNT, SUNDT, to be our general contractor on the project. Another thing that was crucial for us, as mentioned by James, the U.S. has a history of capital overruns and timeline overruns on these projects. With our contract with SUNT, they have agreed to a guaranteed maximum price and guaranteed maximum schedule on this project, further checking that box and providing more certainty to the investors. Finally, as mentioned, and it's obvious, but we have to have a financial model that works and that yields strong, dependable returns for the investors. We also need to see a durable model, one that can withstand low commodity price environments. As today, the majority of commodity price or commodity supply is controlled by foreign governments. We need to make sure that we've got one that's dependable and durable through low commodity price environments, and Westwind has achieved that. As mentioned by James, there is a large increase in the company valuation post FID, post funding. Today, because we've checked all these boxes, we have now been formally engaged by major lenders in the space and private equity investors, and have set a targeted closing date of 5/31/2026 for funding the entire equity need, $365 million. And so the remaining balance that we have to raise, and why we're here today, is really a very small gap, essentially a bridge to make sure that we've got the capital we need to continue developing this project and ultimately getting to that cap stack close on May 31st. And so we have a small balance remaining, and are eagerly looking to get that filled here in the next couple of weeks. And so with that, I know I'm coming up on time here, but with that, we will be sending out a investor deck from Westwind that provides much more information than what I've gone through today, as well as an expression of interest. If you have interest in participating in the Westwind investment, we'd ask that you fill that out, and that allows us to follow up with you and provide additional due diligence materials as requested. And so with that, thank you so much for your time today. We are appreciative of it. We know this busy time of year, and so hope we're able to add some value to you, and we look forward to speaking with you further on this investment. Thank you.
Thank you so much, Micah. And in closing, especially now that we are at the 11 o'clock mark, and we appreciate the thoughtful questions that are coming in, but given the time constraints, we won't be able to address those live today. And for those interested in continuing the conversation, including questions specific to Westwind or investment opportunities in critical minerals, we will be following up after the session. You'll have the option to request additional information or a one-on-one meeting with our team. This is the first in a planned series of educational webinars. We'll share the follow-up materials, upcoming topics, and ways to stay engaged. And thank you again to our speakers and everyone who joined today. We appreciate your time, and we look forward to continuing the conversation. Have a great rest of your day.